Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a great company that probably many people don't really know about this one, but it has been giving dividends the past 15 years. It's pretty much, I think it is a solid company. So if you want to take a look at it and see if this is something that you want to put in your portfolio, definitely check it out. Hope you liked the video. If you haven't done so, subscribe. As always, please remember that I'm just sharing. This is not financial advice. This is not a video for you to encourage to buy, sell, or hold. It's just me just sharing. With that said, let's take a look at this company. So the company that I'm talking about is Broadridge Financial Solutions. The ticker symbol is BR, and basically what is this company? It engages in tech solutions to banks, brokerage, and mutual funds. So if you want to learn a little bit more about it, go to their website. So in the website, they have been providing critical infrastructures that powers corporate governance, capital markets, and wealth and investment management. So if you look at it, their industry-specific technology solutions in data and intelligent power business transformation, helping you get ahead of today's challenges while preparing for what's next. And then these are some of the things who we are and what we do. Now, if we go through one of the things I really want to look at is the dividend history. So if you go to the website, there's a lot of information that you can get for free if you're wanting to learn about a certain company. Going to their website is great. Looking under some of these tabs. But one of the things I want to show you about is the dividend history. So you can see ex-dividend date is 6/14, and then your recorded date is 6/15, and then your payout date, which is stuff. So one of the things that I like to do is looking at here, and then you get your payout per share, right? Because what you want to see is when do you get paid. So if this is something that you're interested in, check to see what this is. So then some dividend investors, they like to have certain stocks pay on certain weeks. So you can see from here it pays you quarterly, but it pays you on the first week. Yeah. Now let's take a look at Simply Safe Dividend based on their dividend safety score. They rated it at 75, which is safe. The dividend yield is 1.64. The market cap is 20 billion, which is a large cap. Going down to the dividend safety, you can see the key metrics. Payout ratio is 40%. During the recession, they have increased their dividend on the 07 through 09. Looking down to the dividend growth, look at this. The last 10 years, 15%, which is very fast. The last 5 years, 14%, which is very fast. The latest is 13%, which is very fast. And again, I always like to see upward trend in terms of the dividends. Yeah, dividend growth streak for 15 years consecutively, uninterrupted for 15 years. Now, looking at your payment, you're going to get quarterly payments in the month of January, April, July, and October, and then your annual payout is $2.90. Ex-dividend date is September 14, and then you get your dividends of 64 cents, and then on October they have the 7821. Now moving along, based on Simply Safe Dividend, it looks like this is a reasonably valued. If you look at the PE ratios, 25 versus 17 for the informational tech. Now if we go through a little bit, what I like to look at is the return on investment capital. You can see 12% in the last 12 months, return on equity, 29% in the last 12 months. Now let's swing to Yahoo Finance. Again, if you're new to investing and you want to get some free resources, Yahoo Finance is one. If you look at some of the things in here, 52-week range, 132. At the time of this video is 177. and then your high of 185. Looking at the earnings, you can see it has met one and beat three, so you'll see the next one, which is quarter three. Financials, you can see again, you can see this upward trend the past 3 years. So the latest since 2022 with a revenue of 5.71 billion, and you got your earnings. Now if we look at the recommended trends, you can see in August it's a lot of hold with one strong buy, and then July is pretty much a mixture. Yeah? Recommended rating is between a buy and a hold. It's more like closely to a hold. Now if we go again to Yahoo Finance, looking at under the chart, so what I like to do is I like to compare S&P 500 versus the stock itself. So you can see based on the 5-year trend, BR is doing much better than the S&P 500, so which is a good sign. But if you go to year to date, you can see like pretty much what's happening this year is it's been a struggle. But the last couple of months from July to August, you can see BR is doing much better than the S&P 500. Switching along to Webull, now based on their analysis, they rated as a hold. 6 analysis rated it a buy of 50%, a hold of 33%, and then you got your sell. Now here's one. If you haven't used Webull yet, and you want to use my link, you get 12 free stocks when you open and fund a new account. So definitely check it out when you have time. Price targets, you get a high of 205, average of 181, and then your low of 168. Now let's take a quick look at BarChart based on their target price, a high of 204, a mean of 183, and then a low of 168. And then you got a hold, currently hold. 3 months ago it was a moderate buy. Breaking it down, you can see one moderate buy and then 2 holds. Now let's take a look at simply Wall Street based on some of the data. You can see price to earning ratio versus fair value. Here it is right there. Yeah. Based on this one, it says BR is expensive based on price to earning ratio compared to the estimated fair price to earning ratio. Now if we look at the share price versus fair value, based on their estimate, using a discount cash flow model, they rated it as 25% undervalued. At the time of this video, it's 177. Based on their calculations, their fair value is about 237. And lastly, let's take a look at TipRanks. At the time of this video, again, it's 177. Their smart score rated as a 9, and then you got your analysis for as a read or buy. There has been an inside transactions of sold shares, so that's something to want to look at. And then look at this 5-year percent is 152%. So you can see at about May 24, 2020, if you would have bought this at $90, you would have done pretty good. And then there was another dip in December 30, 2018. Now if you look at the analysis forecast, 10% upside, and the price tag is about 196, and then you got your high of 204, 196, and then 189. And then looking down to some of the analysis, you can see mixtures of buy, sell, buy. All right. Looking at Robinhood now, you can see the performance today, up 3% for the week. Yep, there you go. Sorry about that. For the week, it was up only 3%. For the month, it's up 18%. And then for 3 months, it's up 30%. And then for the year, it's only up 2%. And then again, for 5 years, it's up 136. So looking at Robinhood's analysis, 50% said it's a buy, about 37% is a hold, and then 12% is a sell. For me, what do I think about it? I think it's a solid stock. I don't know if it has any position in my portfolio. I like to go with another one. I'm more of a traditional, solid 30 years, 40 years, 50-year kind of dividend investor. But this is a solid company, in my opinion. Definitely something that you probably consider. All right, guys. Thank you so much for watching. There are other videos as well, so if you want to watch and take a look. Again, I do appreciate you guys. Thank you so much. I appreciate all the support. Please be safe out there. Stay cool. Keep investing. And I'll catch you guys in the next video, right? Take care. Aloha.